Hey everyone, it is Evan here from the Trade Risk on Tuesday, January 7th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our dashboard here. You can see Tuesday stocks were down across the board. It was a fairly quiet session, but again, mostly negative here across the board. Nasdaq 100 trying to outperform just a little bit. And over the past 5 days, you can see the Nasdaq 100 is showing some clear relative strength and outperformance. Looking at the 10 SMA here and how some of the major indices are performing relative to it, you can see just that chop and a little bit of pullback here in the IWM and Dow is causing us to lose some of the shorter term moving averages. We're still above the 50 and the 200-day across the board. When we scroll down and take a look at sectors here, you can see energy, industrials, technology are at the top of the stack. On the downside, we got materials, we have staples, and biotech over the past week of trading. In terms of major markets, gold holding up here very well and really gathering momentum and holding on to it is GLD, SLV, and USO, so a nice commodities basket there at the top of the list. And on the downside, we have VIX, we have natural gas, and we have emerging markets, but emerging markets are still in the green. So let's jump into the charts here and take a look at the S&P 500. We always like to start with the cash settled market and also a weekly time frame to get that picture, the big picture, to help us inform our shorter term day-to-day decisions. And we can see here, if we look at a weekly time frame of the S&P 500, we are in the process of completing this third week here, and this would be kind of the third week in this trading range, in this general area here around 3240, around let's call it 3200, 3215, all the way up to about 3255 or so. That's been the range that we've been kind of dancing in for the past 2.5 weeks, and we currently still find ourselves there. If we were to say draw some trend lines here and just look at the short-term kind of slope here starting from the December lows, you can see we did breach that accelerated trend line here last week, and we are moving sideways, but we are still holding on to the recent lows here. And if we go down to a daily chart of the S&P 500, you can see the significance of this short-term horizontal support a little bit better. We talked about it in last week's video. We can throw on all the levels here, and you can see these are all of sort of the higher lows and structural shorter-term support levels that we've been slowly ratcheting up as the market has extended to the upside here. And again, you can comfortably see that the market is trading in between this 3215 and 3260 range. And this is what we talked about in our Friday weekend recap, was basically kind of developing into a short-term range here, maybe a short-term top getting put in on the first day of trading here for the markets. We've pulled off of that level. We haven't quite got back up there and retested it. We're really just kind of pulling off. We've got a couple of, or we've got, at least today is an inside session here for the S&P 500, but we're pretty comfortable trading in this range that we've been in for the past 2 weeks or so. So chop and a pause in this uptrend, that still seems to be kind of the verdict here for the market looking ahead. We do have some clear levels though to use, so let's use this 3215, 3260 on the upside to pay attention to. If we start to resolve higher, then of course we have that uptrend continuing to the upside. And if we start to rotate down, if we start to actually close below this 3215 level, then we'll actually have kind of our first meaningful break of support in over a month's time of trading. And again, when we look at sort of the big picture of where this market has come from over the past 4 or so months, you can see that it has basically been, kind of unapologetically running away to the upside here, breaking out of all prior levels and just trending strong with some strong momentum. So that is pretty much the landscape that we see right now. Not a whole lot has changed since Friday's video. We're still sideways. We're still kind of chopping around here in the short term. We did see the VIX. I think the VIX has come down a little bit so far this week. Yeah, so it did get up to 16 last week. Of course, we had some of the, and we still have kind of the ongoing macro events out there in the Middle East that could potentially flare up. So far, the market is, again, more or less, disregarding them, or certainly not panicking about any of the developments there overseas. So we'll continue to see how that affects markets. But for now, the VIX is back below 14. It's down a few percentage here on the week. And so far, again, it does seem to coincide with kind of the sleepy sideways trading that we're seeing at this time. So let's see how we finish out the week. Let's see how we get through. If we make a third kind of weekly close here in this range, that will start to set us up for perhaps a more meaningful breakout as we get to the second half of January. But for now, markets kind of moving sideways here, getting ready for earnings season, which will be coming up soon enough, and we'll have more catalysts to sort of deal with at that point. So that is the S&P 500. Those are the relevant levels. If we look at the Russell 2000, you can see that this is still kind of in the pullback mode as well. We got as high as 167 and 12 cents. That was back at the end of December. That was the recent high there. And you can see it's been kind of pulling back here. Looks still pretty orderly, all things considered. It did, again, break out from its big relevant trading range in early December, and it still remains above this 160 zone. That is the big sort of intermediate zone or area that we'd want to see this market hold above. So far, it's doing it. So we have an uptrend in place, short-term pullback, and again, kind of waiting and seeing how this market follows up some of this near-term weakness. The Nasdaq 100, like we talked about here at the top of the video, is still kind of best in class right now. You can see it's basically trying to get back and close at all-time highs again. It's much closer to all-time highs. The pullback here has been much more contained. Momentum is holding up better. So just all in all, we're seeing some good performance out of the Nasdaq 100 relative to some of the other major markets. So that's it. That's the landscape, pretty similar to what we talked about in the weekend recap, mostly sideways in the short term. Longer term uptrends remain intact. So let's jump into some of the other major markets now. We'll go to TLT next. You can see TLT is pulling back. It had a very strong last week. We talked about kind of the breakout here in the short term from this this pullback here throughout December. If we go to a weekly chart, you can see this is in the context of a multi-month consolidation pattern, but you can see at least the 4-week highs here, this 4-week pullback back into this 135 support area did resolve to the upside last week, but there has been no follow through so far this week. Of course, it's only Tuesday, so when we look at weekly charts, of course, we're not looking at the closing prices of these candles yet, but again, it does give us that big picture kind of overview of where we are. So for TLT, trying to hold on to that momentum from last week, you're going to want to see buyers basically step in sooner rather than later. Holding this above 137 is certainly the ideal spot to keep that momentum in check here in the short term for TLT. If we go to gold, gold is extending its rally to the upside. So contrary to TLT, we can see GLD is going on its kind of third week now. Of course, it had up weeks here. It's technically on its 5th up week in a row, but the last 2 weeks were really when we started to get some acceleration in that rate of change. We started to get that breakout at the end of December. We got some strong follow through last week, and we're starting to get some follow through here this week as well. So we are holding above now the September highs. So we're working up and continuing to see this momentum stick here for metals for GLD. If we go to silver, silver also seeing some continuation this week as well, 2% to the upside. Notice though, it is not breaking above its prior consolidation levels. So essentially from September, we got as high as 1835. We're not there at this point. We're still kind of working our way up the right side of this consolidation, and there is some overhead supply to deal with and some top of the ranges back here around $17 to deal with. So silver's got some more work to prove, but of course, looking at just recent progress, it is heading in the right direction. Last but not least, if we look at energies here, so energy markets, looking at oil, USO is down so far on the week, just a little bit. It's had a nice run to the upside as well. So it had, 5 weeks up in a row. It's coming back into some prior overhead supply as well, where it's failed in the past. So some resistance here, some reluctance to just continue to march higher does make sense. We got some good reference points to use. We basically have 1332, the highs from Monday, the highs from Friday, to use as kind of that upside breakout level at this point. But so far we are kind of pulling back here and could easily pull back a little bit further to kind of come back in check with even the slope here that it's been rising from December. Maybe a move back down below $13 to fill this gap, test this trend line, and we'll see if buyers still like it at that point in time. Last but not least is natural gas. Natural gas is once again now moving sideways here. Again, if you're in that contrarian mindset here and you are looking for some volatility and certainly something that's not extended at all to the upside, we could look at natural gas here. We could draw some the slope at which it's been falling for the past 2 months or so. Notice also in the short term, we've got a bunch of sideways candles here. So essentially we broke and closed to new lows on Thursday of last week. We went sideways on Friday. We went sideways Monday. We went sideways here today on Tuesday. So we've got effectively 4 days of very tight kind of overlap trading here. So looking for a breakout in the short term, whether it is a reversal and a break of this trend line higher or continuation lower, that's yet to be seen. But with some of this recent contraction here in price, let's look for some volatility expansion, at least in the short term. There is some positive momentum divergence still here in natural gas. It's kind of been persisting for quite some time now on this latest leg lower, but there could be something here, especially with this nice 4-day tight sideways action that's been going on. There could be kind of a contrarian squeeze or retracement to the upside in play here in the short term. So that's it. That's what we got here for the midweek video. Pretty short, really not a whole lot to talk about in terms of new developments from price actions. So we'll take it one day at a time. We'll see how some of these weekly bars close up and continue to manage risk accordingly. So that's it for me. Thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day, and we'll see you back here tomorrow for some swing trade ideas during the market session.